Hey everyone, welcome back to another video. And if you watch my previous video, as I predicted after earnings call, Tesla has shot up from a low of 421 yesterday to as high as 436. The earnings call was very positive as predicted, and people started to buy in, and we're live right now. But I just wanted to show you the plays I made today and how I profited off that move. So here today, October 22nd, you can see these are my main moves. I bought one Tesla, and it's not, I didn't buy a share. I bought the puts back, thereby closing out my position. So because the stock moved up so much, the value of these puts dropped tremendously. So they dropped a lot and I was able to buy them back for cheap. So you can see these red numbers, and does that mean I lost money or I spent money? That's not correct. So if you see here, this is the 330 put. So let's look that up, 330.0 put. So you'll see on October 12th, I actually sold this put for $460. So I immediately got this premium. But when you get this premium, this isn't your money yet because you are on the hook for this put. And this means the strike price was 330. If the strike were to drop to 330 or below 330 by the expiration date, which is on November 13th, then I would be forced to buy 100 shares of the person who bought my put at $330. No matter how low the price was, if it was $300 or $200 or $100, I would still have to spend $330 to buy their shares. And that's why I get paid, because I'm taking on that risk that Tesla could drop below this number. So I sell it at this point, but the moment I sell it for this price, this is how much it would cost to buy back. So if I wanted to close this position and get rid of my risk, I would have to pay $460. But as you can see today, after the price shot up, just about 10 days later, the price of this put was only $180 some. So what that means was I sold it at this much and I bought it back at this much. So I actually made a net profit of 460 minus 180. So about $280. And this means my position is closed. That means it doesn't matter if it hits this strike price, I'm out of this position again. So this is how selling puts is profitable, is you sell a put, but then you close out your position so you're no longer responsible for that risk. And look at the magic of taking profit earlier. So the expiration date is November 13th. I could have waited 20 more days to potentially get that extra 50%, to potentially get that 40% profit. If I waited 20 more days, as long as it didn't hit 330, this contract could have expired completely out of the money and I would have been able to keep the whole amount of premium. But why would I wait 20 more days just to make 40% more profit versus I sold it at October 12th and it's only been 10 days. And at 10 days, I was able to take close to 60% profit. If you just do the math, 10 days, 30% of my whole time until expiration, I was able to make 60% profit versus should I wait another 20 days just to make that 40%? And there's still a chance that Tesla could tank. If it tanks past it, then I've lost all of my gains. And it just doesn't add up at all. You should always take profit around 50%. Now I get all of that capital back because, well, I have margin, so I don't actually need to have the cash. But if you don't have margin, if you are selling a put at 330, that means you need to have $33,000 ready on the line. You can't use that because in the off chance your strike price is called, you would need to buy 100 shares at $330 and you would need to spend $33,000. But now because I've closed the position, I actually have my $33,000 back again to open another position. So again, this is why you close early. This is also why you choose expiration dates really far out because you have so much time to manage it. And I was able to choose a very low strike price. And you can see I bought another put back right here. And this I closed today, 325. And then you can see when I bought it on October 15th. So this actually, it's only been 1 week and I bought it back for $244, but I sold it for $290. So I was able to take just about exactly 50% profit in 1 week. And this expiration date was on November 20th. So I could wait a whole nother month just to make that extra 50%. Or it's been 1 week. I made 50% of my max potential gain. and then I close it out, and now I have $32,500 back to me that I can open more positions. Same thing with this 336 put. I opened it October 13th. I sold it for $624. And just 9 days later, I was able to buy back and make 50% profit, as opposed to waiting nearly another month just to make that extra 50%. And there's no guarantee I would make that 50% because, again, Tesla could totally drop. We can't predict the future. All we can do is manage our risk by not getting too greedy, take profit at 50%, set your expiration dates really far out, give yourself time to manage it, and don't gamble. Try your best not to gamble and take profit early. That's how you are successful in the long run. That's it for today. Please hit that like button if this was helpful, and definitely subscribe if you want to see more of my daily trading strategies. This is Green Knight Trading, or Squires Become Knights. Thank you all so much for watching. I appreciate you, and I'll see you soon. Hey guys, right now it's 10:30 a.m. and I just finished editing most of that video, but then I saw that the stock dropped a lot from a high of plus 4.58%, now down to plus 1%. And this actually proves my point why it's so important to take profit when you can. Because if I had waited to see if I can make more profit, now that it's dropped so much, all of the puts that I had already closed out right in the morning, they are worth a lot more now because the put side is getting tested. So now if I were to try to close those positions out, I would have to spend more money to close the position out, thereby reducing my profits. And I would also not have been able to take 50% profit. I would probably have to take 40% profit if I try to close it out right now at this instant. If you look at my trading history, look at when I made these trades. Within the first half hour, and I'm basically done. Had I waited just half an hour longer, I would not have been able to close out these trades. So this is what has happened to me time and time again. I wait for that extra 1, 2, 3, 4%, and the market often turns against me. And it's just not worth it. Get out early, get out when you're hitting your profit mark. Don't get greedy. This is exactly what happens. I thought this was just a great example because it happened literally right after I finished editing.